Buddy, can everybody now see the Family Law Software screen? I'm assuming that you can.
Yes.
Thank you. So this webinar will show you how to use Family Law Software to enter cash flows, to do projections for cash flows, and to understand how the cash flows that you enter interact with the budget report and projected cash flow reports. We'll also learn how to enter the subtleties of income and expenses, such as wages that are not subject to FICA, college expenses, etc. And we will learn how to do current year reports where incomes and expenses change during the year. For example, if there's mortgage refinancing, if child support or spousal support starts during the year, and so on. We're going to begin by starting a new case file, entering information in the file, and then we will go look at how that information flows through the budget report and other cash flow reports, and go from there. So let's begin. We're on the Files and Settings tab of the software. I'm going to click the New button to create a new file. So we'll say we'll have Tom Tremaine and Sally Tremaine. Click OK to begin the file. I already have a file with that name, which I'm now going to overwrite. Right now we happen to be in the state of Colorado. The software looks different in different states as we've customized the look of some of the screens to match the screens on the legal forms, the financial forms, and so on, the child support guideline forms that are associated with that state. But the general concepts will be the same in every state. So you enter the information on this yellow tab here called Client Info. And just to do a really quick overview of the software, the Files and Settings tab, where we were a moment ago, is where you start new files. The Settings tab is where you go to change various settings that persist from file to file. Client Info tab is where you enter all the client information. We'll be spending a lot of time on this tab today. Analysis and Negotiations tab is where you go to do analysis of the incomes and expenses, assets and liabilities. We're not going to be spending any time on this today, but it's a really great tab to explore at your leisure. It's where CDFAs really add value to the process. And then the Forms and Reports tab is where we have our outputs, forms and reports. The forms are official forms, guidelines, child support guidelines, state affidavits, state financial affidavits, and so on. And the reports where we will be looking are the cash flow and tax reports. So that's the brief overview of the software. We've started a new case file. Let's go back to the Client Info tab where we're going to begin entering our data. In most states, there are two sections in the Client Info tab. One section entering the data specific to the child support calculation. In Colorado, it also calculates maintenance. And a second section relating to the information of financial information. That the headline of that section will typically be the name of the state's financial statement, but we're collecting all financial information, not just the information needed for the state's financial statement. So you begin with the background and child screen. You could enter the date of birth, date married, date of separation, and so on. Filing status for the current year and future years, and if you want to, you can enter information about the children. So we'll enter a child, born in Abelard, born in 2010, and maybe we'll add another child, Eloise, born in 2014, and so on. You specify whether the children are children of the relationship, and so on. The next tab is the Form Info tab, which is segregated from the other financial information. This is information that is specific to the financial affidavit for the state, but typically not used in any financial information. So that one, if we are not preparing the financial affidavit, just doing financial planning for the parties, that one we can skip. So we've segregated onto this Form Info tab all the information that CDFAs can easily skip. Next, we come to the Income and Expenses tab. This is where we're going to be spending most of our time today. And then the Assets and Debts tab, where you will enter assets and debts for the parties. And then the last tab is the Pension Plans tab, where you enter information about a defined benefit pension. So today we're not going to be talking about defined benefit pensions. We're not really going to be looking at the entry of assets and liabilities, except as it's incidental to the entering of income and expenses. So today we're going to focus on this screen, the income and expense screen on the Client Info tab. We're going to begin by entering information on the screen and then seeing how that information flows to the various reports, and we'll be looking at the subtleties of those reports. So let's begin. Let's say that I'm on a screen called Wages and Deductions for Tom, and let's say Tom is earning $8,000 per month. You'll notice that you can enter per year, per week, whatever time period that you like. And on this particular screen, the software has instantly calculated the federal, state income tax, Social Security tax, and Medicare tax. It's also done that over on the tax report, which we're not going to jump to look at. You can enter wages from another employer if you like. And now I'm going to click this link at the top for Sally and enter Sally's wages of maybe $2,000 per month. And now we have entered wages for both parties. Also, note that there's a link here called Click for Both Parties, and this is great for mediation context, or if you just want to enter things more quickly, you can enter the wages on a side-by-side basis for the parties. Okay, I'm reading the chat, and I'm seeing that the screen is too small. I think this will, what I can do, let's see, screen is too small. Okay, I can try this. It's going to depend on everyone's display settings. Some people are probably seeing it looking fine, but I will okay. Okay, this should be a little bit bigger. I can, make it bigger still, but this I'm hoping will resolve the issue about screen size being too small. And let's continue. So we've entered wages. The next form of income is non-wage income, so we can enter a bonus for Tom on a monthly basis, or if we only know annual, I can click this number sign button and enter an annual bonus, and the software will convert it to monthly, so that's a nice little feature. And I can enter various other forms of miscellaneous income. The next screen is for real estate expenses, and what I can do is, if I want to enter real estate expenses with each property, I click this checkbox, and then when I click this button to add a real estate property, all the expenses associated with that property will be there. That's really nice for a couple of reasons. We'll see the first one in a moment. But the second reason is that if you have multiple properties, you can enter each property and enter the expenses associated with each property. So let's say this property is worth $500,000. Let's say that the first mortgage balance is $200,000. The monthly payment is $2,000. The interest rate is 2%. And based on that information, the software will automatically calculate what the monthly mortgage payment is, which is really nice. I'm going to click More Info just to see it. Now we're at the detail screen for the mortgage, for the real estate property. I'm looking at this section called First Mortgage. I'm clicking More Info here, and there's the mortgage amortization. The annual payment is $24,000 a year, and the software is automatically amortizing that, automatically taking the interest portion over to the tax section. And let's go back up to the top level, and we can enter other expenses as well. So we can enter electricity on a weekly, monthly, or annual basis for the property. So maybe it's $120 a month. Maybe trash removal is $30 a week. Maybe the cell phone is $140 a month, and so on. Now, these are the total expenses for the property. And the next thing we want to do is allocate those expenses between the parties. So there are various ways you can do that. If you go up here and allocate the property between the whole property between the parties. So let's say that this doesn't typically happen with real estate, but let's say that Tom is going to keep 75% of the property. As soon as I type 75 in there, the expenses are all split 75-25 as well. Now, typically at the early stage of the data entry, you don't know who's keeping the property, so that percent of marital equity would be blank. So we give you another field right here where you can enter the expenses, and maybe they've decided that the expenses are going to be divided 50-50. And now all the expenses are divided 50-50 as allocated. But maybe they've decided that the real estate tax, which is $8,000 a year, is going to be paid 100% by Tom. So you can override that entry on a line-by-line basis. And now let's go over to our budget report here on the Forms and Reports tab. And I'll click the budget report. And we're displaying Tom and Sally side by side on a monthly basis. And here are the mortgage payments, $2,000 a month. And here are the living expenses. You'll see that most of them are divided 50-50, except for the real estate, which is being paid 100% by Tom. The software is also calculating the taxes. So this is the first round of interaction that we see between entering the expenses and seeing them reported on the budget report. Now let's go back to the client info screen and continue. Let's enter living expenses. So these are entered for each party. What we're trying to do is project how the parties are going to, what their budgets are going to be, how they're going to pay for things going forward. So going forward, maybe Sally has a monthly grocery bill of $250. Tom has $180. Sally has food for children of another $100, and you can enter them together or not, however you like. Tom has an eating out bill of $400, and so on. There are medical expenses, vehicle expenses, so maybe Tom's vehicle payments are $400, Sally's are $200. Scrolling down a bit more, we have tuition, we have other school-related expenses for the children. And then we have a special kind of expense, schools, colleges, camps, and other major expenses. And this is a special expense because this is the kind of thing where we think of tuition as being a number that we know, and then we may want to negotiate who pays it. So I'm going to click this checkbox to add a, maybe for the children we have private school, and maybe it has already started, starting in 2015. It's going to go for 8 years, and it costs $25,000. And now we can decide who is going to pay. Is Tom going to pay 50%? Is Tom going to pay 100%? Is Sally going to pay it all? And maybe we've decided Tom is going to pay 25% and Sally is going to pay 75%. So now let's go back to our budget report and let's look at the additional expenses we've added. So now we have more living expenses. We have Tom's $400 for vehicle and Sally's $200 for the vehicle expenses. And we also have the major expense of private school. Software has calculated the monthly amount for that and then given Tom 25% and Sally 75%. And then at the bottom line we can see, and then we've calculated each party's taxes based on all the expenses that we've entered to this point, based on the mortgage interest deduction on the tax side. And we see that Sally is running a loss and Tom is running a net profit, and this is exactly the kind of analysis that you want to bring to your clients, showing them how they're doing during the year. So Sally's running a loss. That encourages us to go and look at child support and spousal support. So where does that get entered? We go back to the Client Info tab, and for the calculation, we look on the link labeled Support and Maintenance Data. There are some states that have several screens for child support. We're actually in the process of, we'd like to think, improving that so that the child support screens are now shortly all going to be one screen with pop-ups popping off that screen. That should be more easily orienting. And so we see on the screen, we enter the wages, we can enter wage-like income. Of course, some of that's already been entered. One of the nice things about the software is it's all integrated. So if you enter an income or expense item in one place, it of course is populated everywhere else that it could be relevant. So we can enter the date married. Let's say they were married in 2000 and they're separated in December of 2016. And if I click this box, the software will calculate maintenance. This will be the case in states in which there is calculated maintenance or calculated spousal support. These states include Colorado, California, Pennsylvania, Illinois, New York, probably several other states. You probably know whether your state is one of those. And if there is such a state, we will calculate maintenance for you. And we can enter other things that impact the child support result, child care, health insurance, and so on. All of these items, you click the open triangle to see the next section. You can close the triangle to close it up and focus on just the sections you want to focus on. So now we've calculated child support, and we see the calculated amounts. And the question is, what amount flows to the budget report? What amount are the parties actually going to use? Because in many cases, in collaborative cases, in mediated cases, in high-income cases, sometimes in low-income cases, the calculated amount is not the amount that ends up being used. And that's true of both child support and spousal support. So we need to determine, for purposes of the budget report and for purposes of our cash flow projections, what child and spousal support amount do we want to use for those projections? And the answer is here on the Support to Use screen. This is the screen where you determine, for purposes of the budget report and cash flow projections, what child support number you're going to use. So I can click this checkbox here, and that puts the calculated child support amount in. And I'm going to start it in January, so we've got 1173 per month of child support, and we're currently using the statutory maintenance amount of 2333 per month of maintenance, also starting in January. So now let's go over to our Forms and Reports tab again, look at the budget report monthly, and here we have the 1173 of child support being received by Sally and the maintenance of 2333 being received by Sally as income to her. And as we scroll down a bit, we see as an expense to Tom those same numbers. And if we scroll all the way to the bottom, we see, and this is really just happy coincidence in this case, but at the moment it ends up that both parties are basically breaking even at the end of the year. So we've had a fortunate outcome using the calculated values. Now let's take a moment and look a little more closely at the budget report itself, because this is a really very, very flexible report. You might even call it a protean report, in that it can be used to report many different things in many different ways. And the way that, the first thing to see is that you can project future years on a detailed basis. And essentially what's happening now, we haven't made any changes to things, is that each year wages and expenses are increasing with inflation. Let's take a moment and see how we can increase those things at rates other than inflation, and how we can change the inflation rate itself. To change the inflation rate itself, we go to the Files and Settings tab, click on Settings, click on Assumptions, and assumption number 4 here is the inflation rate. We update this annually based on the Congressional Budget Office projections, but you can change the inflation rate if you think it will be different. To change the rate of growth of other items, let's go to Client Info. Let's look at wages in particular. So I'm going to go to Wages and Deductions. I'm going to click More Info on the wage entry, which is this More link. And one of the entries here is the rate at which Tom's wages will increase. And that's set by default to be the same as inflation, but I can change it to any other rate that I like. Let's click the back button at the bottom to get back to our wage screen. And for living expenses, let's go to the living expense screen. And the same will be true of real estate expenses, what I'm about to show you. I'm going to click now not for both parties, but just for Tom. And I see the More Info link. And I can click on that. And for every expense, there's an option either to increase with inflation. That's the default. Again, the default is everything just goes up with inflation. Or some other rate. So I could say I think groceries are actually going to increase by 5% a year. And then these numbers at the bottom, the cash flow, future cash flows for groceries will go up by 5% a year. So you have a lot of control for purposes of projections of the rate of increase of every single item. And this reflects one of the goals in the software generally, which is to allow you to enter things quickly, to give you a lot of analytical power with need for as little input as possible from you, but to give you total control over all of the cash flow projections. So let's go back to our budget report again. So we've seen how we can use the budget report for cash flow projections. Typically, people don't tend to look at details of the budget past the initial year. They really focus on that first year and use other reports, which we'll look at a little bit later on, to show projections in future years. But for example, if you want to see budget on a detailed basis after that spousal support stops, you can click on the budget report for that year and see what the budget is going to look like in that year. Okay, now let's look at this link for budget report options. Let me go back and highlight that again. I clicked it pretty quickly. At the top of the screen, there's a link. Click here to set budget report options. And let's click that link, and there are a lot of options to look at, which gives you lots of flexibility. So the first option that we're going to look at is the second option on the page, which is whether or not to include living expenses in the report. If I clear this option and I go back, we just see income and taxes. And there's a similar type of option with respect to taxes. If I clear this checkbox and go back, I'm seeing just income and expenses, but no taxes. And I can do the same thing. I can clear the showing of maintenance and child support, and now we're seeing income, expenses, taxes, but no child or spousal support. So there will be situations in which you want all of these options, and you have the ability to include or exclude sections simply by clicking those checkboxes. Also, this note will customize based on the sections that you've picked, but you can also just type over the note and type any note that you like at the top. So let's bring back spousal support and child support. And the next option we're going to look at is this one. We're going to look at the sub-options within the option to include living expenses. The first one is the option to include IRA 401k contributions. Now, we haven't entered any IRA 401k contributions so far. Those are entered with the IRA 401k asset. And sometimes people want those IRA 401k contributions to be included in the budget report because then you're seeing cash flow, cash availability. Other times people want them to be excluded from the budget report. And the thinking there is that, well, it's not really an expense, it's really just a transfer of cash from one pocket to another. I don't want to treat it as an expense because it's not really an expense, it's discretionary and so on. So two different points of view, two different perspectives, and again, there may be situations in which you want to reflect each one. You have that flexibility, you have that capability simply by clicking that checkbox. Also, sometimes you may want to include or exclude children's expenses. We did enter children's groceries, for example, children's medical. Those expenses can be included in the report or excluded. There is in the software a separate report just for children's expenses, and sometimes people want to segregate the party expenses from the children expenses. You can do that, again, simply by clicking this checkbox. Okay, so now we've looked at some of pardon me, some of the budget report options. What we're going to do now is consider, I'll show you one more option, sorry, before we do, which is line numbers. That's this checkbox down here in the layout section. And I'm just going to click the back button. And all we've done here is put line numbers. Line numbers are great in situations where you're going to print the budget report, you're going to pass it around, you are in a negotiating context, and it's very easy to say, let's look at the eating out on line 17. Everybody can do that together. So there's an option to include or exclude line numbers. All right, so that is the first set of options really relating to layout, display, including and excluding items. What we're going to do now is talk about options with respect to the budget report relating to the subtleties around timing. And to illustrate that, we're going to return to look at child support. So I'm going to click the Client Info tab again and go to the Support to Use screen where we specify what child support number is going to be presented on the budget report. Again, the support and maintenance data screen and this number here at the bottom will show you the calculated amount based on the state's formula, but you don't always use the calculated amount, and so we have a Support to Use screen where you specify the amount that you're going to use for purposes of budgeting and cash flow projections. And just to make the presentation at this point a little simpler, I'm going to, what I did was I cleared the checkbox that says click here to use Family Law Software's calculation. Let's click that box again, the calculation appears, clear the box, and now you're able to enter your own calculation. So let's enter $1,000 a month. Again, just for purposes of entering a nice round number to illustrate what we're going to be doing now. So child support doesn't always start in January, right? Child support sometimes starts in the middle of the year. In fact, most often it starts in the middle of the year. And let's imagine that child support is going to start in July of 2017. What's the impact of that on our budget report? How do we reflect on the budget report the fact that child support is not starting in January, it's actually starting in July? Well, let's go to our budget report and see what happened. We go to our budget report and we see that the number for Sally as income is $1,000 and the number for Tom as expense is $1,000. So what we have done on the budget report in this situation is reflect what we call the periodic monthly payment, the monthly amount that is going to be paid for child support, and the bottom line then reflects what the monthly budget will be once child support starts happening. So that's great, and that's one view, right? What is the monthly budget going to be once child support starts happening? I now know the answer. And the answer is Sally's going to end up with a plus $596 a month, and Tom is going to end up with a plus $1264 a month. And that's great if that's the question. But suppose the question is, what is my cash flow going to be in the year 2017? Those child support payments don't start until July. I can't just take this number and multiply by 12 and figure that's how I'm going to be. So there's another view that you want when you have income and expense that starts during the year. There's another view that you want. You want the actual 2017 numbers. How can I get that? Well, fortunately, there's a way in Family Law software to get the actual 2017 numbers, and that way is simply to go up to my budget report options and change my view from monthly to annual. And now I click the back button. I've got an annual view, and you'll see that in an annual view, the child support received is $6,000. So in annual view, we are looking at the actual annual cash flow for Sally in 2017. And we see that she's net $1,154, means she's still positive, but she's not positive by 12 times 500, which is what we might have thought if we had naively taken the monthly view and multiplied by 12. So we are able to, conversely, Tom is much better off than he would have been if we'd taken his monthly, which is a little over $1,000, and multiplied by 12, because he doesn't have to start making those payments until the middle of the year. So we have a view in the budget report that allows us to see actual budget for 2017, and that's annual view. And we have a view that lets us see what is my monthly budget going to be after all of the periodic events that are going to occur during the year have happened. And that's the monthly view. And that's the reason that we set it up this way is that people, I think, naturally tend to do that. They naturally tend to look at annual view when they want to get the picture for the year. They naturally tend to look at monthly view when they want to see, how am I going to be doing? What is my budget monthly going to look like going forward? But it's nice to know that that is the way the software works, because it is actually delivering to you. It is not the case that you take the monthly view and multiply by 12 and you're always going to get the annual view. Those are really delivering different bits of information to you. So the same thing is true with spousal maintenance. If I clear this and I enter spousal maintenance of $500 a month, and it begins in July, we're going to see $500 in monthly view and $6,000 in annual view. Let's look at other situations where the timing matters. So I'm going to go back to my income and expenses screen, and I'm going to look at my real estate expenses. And let's click More Info here. And let's suppose that the mortgage is going to be refinanced. That's another situation where you've got a significant thing changing in the middle of the year, and let's see how that works. So I've clicked More Info to get to my real estate details screen, and I'm looking at my mortgage. And the first question is, will there be a refinancing mortgage? And if I say yes. And now I enter a new set of entries based on the notion that I'm going to have a refinancing mortgage. So maybe I had monthly payments of $2,000 before the refinancing at 2%. My new mortgage is going to be $400,000. Maybe it's a 15-year mortgage, closing on April 30th. And I can enter refinance costs by each party. I'm going to skip them for the moment. Let's say the new interest rate is going to be 3%. At the time of the payoff, my balance was $300,000. And now the software asks me how much of the proceeds are going to be kept by Tom and how much of the proceeds are going to be kept by Sally. And it does a little calculation. It says my new mortgage is $400,000, my old mortgage was $300,000. Therefore, I've got $100,000 of free proceeds, free cash proceeds, and who is going to keep them? And if I say that Tom is going to keep $20,000, then I press enter. The software knows Sally is going to keep $80,000. If I say Tom is going to keep all $100,000, then it knows Sally is going to keep 0. And I can click More Info again, and I can see the going forward payments on the new refinance mortgage. It's going to be $33,000 a year, which is about $2,600 a month. Now I go to Forms and Reports, and in monthly view, sorry, we're in annual view, 30,000. We'll stay in annual view for the moment. The $30,000 that's shown here is the actual mortgage payment that is going to be made during 2017. It includes the $2,000 per month up to April and the closer to $3,000 per month after April. This is the actual payment which can be used to do my budgeting for the year. If I click up to Budget Report Options, and I change from annual view to monthly view, what I'm going to get is this number, this monthly number, $2,700, is my mortgage payment on my refinanced mortgage. So if I want to see, again, how is everything going to be after the dust is settled, I go to monthly view, and I see what the payment is going to be after the refinance. Let's look at another thing that can happen often with a residence. I've gone back to the client info screen, back to my income and expense screen, back to my real estate expense screen, and I'm going to click More Info again. And I'm going to not refinance the mortgage, but actually sell the property, right? This often happens. So the way that I do that is I say yes to this question, will the property be sold? And I scroll down, and we enter a sale date for the real estate. Maybe it's going to be October 5, 2017. And the software pops in the value at the sale date, various things which we can look at. You enter a cost of sale. Sorry, you enter original cost of real estate, which maybe was $250,000. And the software will prepare for you a real estate expense report showing you the proceeds and so on. And now let's go look again at our budget report and see how the budget report handles the sale of real estate. So if we look at our mortgage payments, we see that in monthly view, again, we're looking at the going forward payments after the dust is settled. Because there is going to be a sale, the software automatically takes the real estate out of the picture. Monthly view after the dust is settled, no mortgage payments at all. Now typically you would buy another property and there would be mortgage payments for the new property. Those would be reflected. And let's look at annual view. So I click my budget report options. I look side by side annual, click the back button, and now I have the payments that would be made during the year 2017 calculated up to the date of sale. Actual budget in the year 2017. So that's another example. And again, the concept, which is the same in all the examples, is that monthly view shows the budget after all of the transactions, the major transactions that are going to occur during the year have occurred. And this is my going forward budget. So after child support payments have begun, after spousal support payments have begun, after refinancing, after a sale of the property, We haven't done it as an example, but after debt is paid off, if debt is paid off and so on. Annual view is actual expenses during this current calendar year. So that explores a very important and useful subtlety of the budget report relating to timing. Just a little bit out of sequence, but I'm going to show you one more thing, which is the option for showing, maybe we've already done it. Well, a couple more options. One is subtotal living expenses by category. So I click the back button. Now we have living expenses per household, for transportation, for child, for personal. This is a really nice option. You might want to do it if you're entering expenses in detail. You might want to not do it if you're just doing a back of the envelope. I'll throw in 2 or 3 expenses. And there's an option to change the sequence in which you're listing things. So this option, this checkbox shows subtotal for income after taxes. So we see income, taxes, income after taxes, then expenses, and then income after expenses. Versus the default way is to show first income, then expenses, then taxes, and then the bottom line. So you can also change the sequence there on the budget report. Okay, I want to show you a couple more subtleties with respect to wages in particular, because it's an important income item, and then go look at some of the other projected reports in addition to the budget report. So to look at details on the wage item, we go back to client info, we go back to our income and expenses screen, we go to our wages and deductions screen, we click more info on the wage, and now we get to the screen where we can enter details about the wage. So we can enter, for example, if there's a local wage tax, we can enter the local wage tax. As we discussed earlier, we can enter wages increasing at a rate different than inflation. We can enter the retirement age. By default, it's age 67, just because that's when Social Security kicks in. This is sensitive to people's ages. Older people may still be seeing 65, but we can change that. Also, and this happens a lot for government employees, other public sector employees, their wages may or may not be subject to FICA or Medicare, and you can specify here that wages are subject only to Medicare or subject neither to FICA nor Medicare, and that will show up on the tax report. Finally, there's an option, and this is an option for expenses also, to override a wage when you're doing cash flow projections. So you'll see at the bottom of the screen we're projecting 10 years right now. You can override that wage. So maybe Tom is a teacher and he's going to complete a certification which is going to entitle him to a bump, and that's going to happen in 4 years, and instead of earning $104,000 he's going to earn $120,000, and that's great. So I've overridden that wage, and you can do that with any year. But you want that $120,000 to be ongoing, right? You don't want just 1 year. You want it to now resume increasing with inflation, starting with $120,000. And there's a way to do that, and that is this checkbox called Overridden Wage Resets Base Wage. So if I click this checkbox, the $120,000 becomes the new base, and it now goes up with inflation from there, 123, 127, and so on. So this phrase is a little peculiar, parses a little oddly. Overridden wage resets base wage. What does that mean? But now you see exactly what it means. If you override the wage, it resets the base. This becomes the new base, and the numbers increase from there. And there's a similar option on expenses if you think expenses are going to jump or are going to diminish after a certain point. So a common thing is to have child care running for a certain number of years and then diminishing and then stopping entirely. You can have it diminish by entering an overridden expense, clicking the checkbox there, and that will give you a new lower level of expenses. So this is just an illustration of ways to get, as we said before, total control over the income and expense projections. So what we've done is we've created a case. We've entered income and expenses for the case. We've seen how those income and expenses are reflected on the budget report. In particular, some expenses like real estate expenses, you enter the total expense and then allocate that expense between the parties. That's also true of college expenses and primary school expenses where there are large expenses. You know what the total is and you want to allocate them between the parties. Other income and expense items you enter for each party with the notion that you're going to be projecting what their expenses are going to be going forward. Having said that, you can also use it to emulate past expenses as well for lifestyle analysis. There's no reason that you can't use it for that purpose. Either way, you're entering the other expenses on a party-by-party basis. Those then flow to the budget report. And we've seen that on the budget report, there are many ways that you can present them. You can present in a monthly view, an annual view. You can also present a weekly view, which is like monthly view in looking at the way things are going to be, the way the budget is going to be after all the major events have happened, or annual view, which is actual expenses given all the ebbs and flows for the current year. I'm going to take one extra minute and just look at some of the other cash flow reports in the software. And the way that we do that is to click down to the More Reports link, click this link at the top for planners, and you have over 60 different reports. And just looking at a couple of the cash flow reports, there's a very high-level report, net income after expenses and taxes. And one thing you'll see that's kind of neat is that it's not just a straight line, as you may get with simpler software. It's a jagged line, and that really reflects the level of detail that you have incorporated into your projections. The fact that it looks like this, a little bit jagged, really shows that this is a very, very detailed and therefore very credible projection of budgets for the parties, that you've really incorporated a lot of the things that are really going to happen to people in these cash flows. That's a really nice summary for people. The next level of detail is the summary total spreadsheet. This shows income on the left, assets on the right. For the 10 years, one cool thing about this is you can show income and assets for two parties for up to 20 years on one piece of paper. So it's a really cool report in that respect. One thing to observe is that the net after expenses and taxes becomes an asset. So this accumulated savings asset is, is the cash flow that is available at the end of the year. You'll notice that for Sally, it's the same as the first year's accumulated savings is the same as the first year's net cash flow. It's a deficit for her. For Tom, it's a positive number. This reflects 48,391 of net after expense and tax money, and 100,000 of mortgage refinance proceeds. Anyway, that flows into the assets, and so you see this link between expenses and assets, and it's very, very cool, I think. And then the next level of detail on expenses is the spreadsheet for net income after expenses and taxes, and this is kind of an intermediate level of detail. It's on a category by category basis. You can see the major expenses, the living expenses, the wages and salary, the bonus, etc. And then finally, the greatest level of detail is, to end where we began, the budget report. So that concludes the formal part of the presentation. Thank you all for attending. I understand that now there's going to be a little Q&A period, which is going to be moderated, I think, by Brittany at IDFA. Thanks for. I heard a click. I think Brittany may have come on, and happy to have questions relayed to me. Or you can just type them in your chat window. Actually, I'm not sure I'm seeing the chat window. So either type them to the presenter or type in the chat, and we will handle them as they come in.
All right. All right. So our first question that we're going to take is, I am so sorry. Where did I go? Can the reports be run to include both the monthly and annual views in the same report?
Okay, great question. So it's actually one of the options. So I'm going to my budget report options page, and this is an option: display parties, income, and expenses on separate pages, show weekly, monthly, and annual columns. So I'm going to click the back button, and now we have weekly, monthly, and annual columns. And the question would be, which view did you pick for this one, right? Is it as if all things have taken place view, or is it the actual for the year view? And when you've got weekly, monthly, and annual all together, it's the actual for the year view. And the reason that we chose to do that is that that way the 52 times the weekly is the annual, 12 times the monthly is the annual. It all seems to foot very nicely. The only view that you get where you get the as if view is if you have only monthly or only weekly. And because weekly, monthly, and annual takes up a lot of space, we only show one party at a time. So now we're seeing Tom, and we scroll down. This would actually be a page break, and then we see Sally. But you can see weekly, monthly, and annual, weekly, monthly, annual all at once, and you're getting the year's actual expenses when you do that.
All right. Next question. Does the software auto-save as you go along?
Yes, the software is auto-saving constantly. You can save if you like. If you're so various things trigger the software to save. I think it's every 10 minutes. Also, I think every time you change the tab. So when I go from here to here, it's saving. But if you are at all concerned, you can just type Control-S, as I've just done, and it will save and pop up a little indicator that you've saved. You can also go to the Open Save Send screen and click the Save button, and it will save. You can do that. Isn't what was asked, but you can save the file under a different name, and thus make multiple scenarios for the parties or timestamp scenarios for the parties. This is how it was when we negotiated it on February 20th. This is how it was when we negotiated on March 1st, and so on. You can make as many of these as you like. I'll also mention it does happen that people lose data files because they're on a remote server and they lose their connection, whatever. We have a feature called Restore, which will let you get back. So if I click this file, it shows all the times that were saved of that file, and you can just click Restore. So the software, not only is it automatically saving as you go, and it also saves when you exit, but it is constantly making backups as you go as well.
All right. Next question. Does the software show the tax savings for the family when spousal maintenance is paid?
Yes. So this is an analysis tab question. Let me just make sure that we have a maintenance number in there. So we've got, let's make it a little bit more dramatic. Let's say it's $1,500 a month. There are many, many, thank you for giving me this opportunity to explore this just a little bit, because this is really a really, really important part of what a CDFA does, is look at all these analytical tools. And one of the analytical tools is called Maintenance After Tax. So it's really simple to get to. You just click the blue Analysis and Negotiation tab, click the link on the left for Maintenance After Tax. We try to use whatever term is used in your state. So in some states it'll be called alimony after tax. In some states it'll be called a spousal after tax for spousal support. But you get the idea. And we show the 2017 actual and the 2018 projected spousal maintenance payments. The reason that we show 2 years is very similar to the reasons we were just discussing with respect to the budget report. 2017 is a partial year, and people really want to know what is the going forward basis. So we show actual numbers in both cases, but the 2018 number is going to be typically a full year of spousal support payments. So in this particular case, the after-tax cost is the pre-tax spousal maintenance is $18,000. The after-tax spousal maintenance is $12,000 a year, or $1,000 a month. And we also show the savings, the tax savings due to maintenance. Tom is saving $4,700 a year federal and $8,400 a year state. And we also make it graphical. So this is Tom's pre-tax maintenance cost and his after-tax maintenance cost. This is Sally's pre-tax maintenance income and her after-tax maintenance income. And the blue and the magenta bars are identical because it's the same amount on a pre-tax basis. Whatever Tom pays is what Sally receives. But the green and blue bars will be different depending on, because the parties are in different tax brackets. So short answer is yes. And the longer answer is that there's a really cool chart that gives lots of helpful information and a visual display.
All right, so our last question we have time for today is your software applicable in Canada? And if not, what's the equivalent software?
So the software does, just as the answer is yes, it's applicable in Canada with a minor caveat. If you go to the Files and Settings tab and you click State, and this will be of interest to the Americans as well, I can change the state, and all of the states in the United States are in the software. When I go over and click Client Info, I now have the Connecticut child support and the Connecticut financial forms, and so you may be working in Florida and you may have a client who has a state that's filed in New York, or you may be in Nevada and have a state that's filed in California. You can get child support for all of those states just by changing the state to the other state and looking at child support there, or you may be curious what the state taxes are going to be. And also on this state button, below all the American states are all the Canadian provinces. So if I click Ontario and I click Client Info, I'm now getting child support in Ontario and a generic financial form, but the budget report, all the cash flow projections, this is the child support worksheet in Ontario, all the cash flow projections, the taxes. If I go to the tax report, I'm now getting the Canadian tax report with the CPP and QPP and RRSP instead of FICA and IRA 401k. So that's all Canada customized and Canada specific. The caveat is that we do a spousal support calculation for Canada, spousal support, but it tends not to match the leading product used by all Canadian attorneys, which is called DivorceMate. So if you want to match attorneys, you need to get DivorceMate, but DivorceMate does not do financial planning like family law software, so you either take your pick or get both if you're in Canada.
All right, perfect. Well, we are going to send all of the questions that did not get answered on the webinar to Dan, and he will be responding directly to those. I just want to say thank you so much, Dan, for your presentation, and thank you to all of you that joined us. We hope to see you for our March webinar. Have a great rest of your afternoon.
Thank you, everybody.